Hey everybody, Gary with Basecamp Trading. Take a look at crude oil. This is a 240-minute chart in crude. This has been really a mess for the most part until today. Today we actually got a pretty decent move. You can see that the ES that came up here tested the 200 again. You can see this 200 EMA has just been a serious sticking point for crude. And we came up, tested again today, left a topping tail, and then this really bearish bar. This is a very bearish bar. Opened at the top, closed very near the bottom, and also had a close underneath the 50 EMA. Left a little bottoming tail. And then the next bar opened up, came back, tested the 50 EMA. Again, we know these EMAs are significant support and resistance. Made what we call a last kiss, and then another really bearish move to the downside. The entire body of this bar was all selling, pushed all the way down here, now got way significantly undervalued. So we got to pull back, which we were due for. But this was a really bearish bar. The nice thing about this, though, is this was a very bearish 240-minute chart that led to a great 30-minute bear flag. This is our 30-minute chart right here. And you can see this was that bar that pushed to the downside on the 240. And then we pulled back. And then that next bar, as it was triggering the low of that first bearish bar, we were also triggering this 30-minute bear flag right here. And this was a great entry. And if you just wanted to trade the 30-minute chart, the rules that we use for trading the 30-minute chart, trigger the bear flag, then your stop just goes at the top of each previous bar. So this would have triggered with this bar would have triggered the bear flag. Stop goes top of this bar. Once this bar closes, stop goes to the top of this one. Once this bar closes, stop goes to the top and all the way down. And had you just been trailing your stop that way, this bear flag kicked in at 39.72. And this bar went as low as 38.41. So well over $1,000 per contract. If you actually waited to get stopped out, you would have got stopped out at 38.78, which still would have been $1,000 per contract. You would have had the chance to grab even more than that, depending on how you're managing your trade. But if you were just simply managing your trade based off of the 30-minute rules that we use, this nice push down that was in confluence with our 240-minute chart would have been good for potentially $1,000 per contract. So nice bearish move on the 240 that led to a nice bearish bear flag on the 30-minute chart that ended up being a pretty nice push down in crude.